Good morning. Oh, yes, it's me, Kenny Polcari, here with my Dunkin' Donuts. And today is Thursday, April 14th, 2022. And so much is happening even before 7 o'clock this morning. And we're going to get right to it. So what is it that you need to know? Inflation surging to new heights. But it's peaking is what they tell us. It's almost laughable. Markets, investors ignore that data, and they go on a bargain hunting spree. 10-year yields back off a bit, adding fuel to that move, and more bank earnings today after yesterday's launch. So we're going to watch for the guidance because that seems to be where it is. And Musk is stirring it up, creating all kinds of hysteria. And now this for dinner tonight, we're going to have the pan-seared oven-roasted chicken thighs. They are delicious in an orange brandy sauce. Okay, so this is breaking. Musk bids $54.20 a share for 100% of Twitter. It's sure to redirect the narrative, and I'm sure Joey Biden is so happy that this will take the focus off of him and off the rising inflation. The stock surges by 12% this morning in the pre-market, trading at $51.50. As he says, the company needs to be transformed, so therefore it needs to go private. Okay, we'll get to that in a minute. Now, stocks advanced yesterday. The Dow gaining 345 points or 1%. The S&P up 50 points or 1%. The Nasdaq up 275 or 2%. The Russell adds 40 points or 2%, while the transports added nearly 300 points or 2% as well. This is the inflation at the producer level ticked at 11.2%, well ahead of the expected 10.6%. Making that the highest it's been since they started collecting this data. The administration making sure to blame this spike in inflation on Vladimir Putin's war in Ukraine and still disrupted supply chain, which then means I guess you have to also blame it on Xi because of the absolutely insane COVID restrictions that he put on his country during the height of the pandemic and is still putting on his country as remnants of it continue to float around the air. By now, we have all seen the video of what's going on in Shanghai, the people screaming out of their windows. And I'm sure it's happening in Guangzhou as well. Forced lockdowns, bringing those two very important manufacturing important cities to a screeching halt again. So as you can see, it is screwing up the supply chain and adding to the inflationary pressures. But to be clear, nothing that the current administration has done is responsible at all for the surging prices. Forget about how they paid people to sit at home, stimulus checks that went into the market versus being used for everyday expenses. I mean, we all remember the stories of how so many people were bragging about finding $1,400 in their bank account that they never asked for, but were happy to take and invest, and they put it right into the market, which causes us to ask, why exactly did we send out all that money to people who didn't need it? I'm fine sending it to people who did, but we sent it to people who did not. Now, the Fed, that's another issue, right? Because the Fed remains a separate agency. It's not part of the Biden administration. So what they do has no bearing on the administration at all. And like I said yesterday, it's comical how we're now asking the Fed to fix a problem that they created, how they mismanaged or at least misjudged what coming out of the COVID pandemic meant. 12 years of stimulus, bond buying, more stimulus, artificially low rates bred what we are living with today. Calls for a slowdown in stimulus months ago fell on deaf ears. All we heard was it wasn't time. The economy needs more assistance. Not to worry, we got this. They were all the arguments that we heard. And so my question is, how'd that work out? Yesterday, we learned that inflation at the producer level is at rates not seen in 40 years. And while the administration is leaning on the likes of Goldman and BlackRock and others to calm the markets and spin the story that the worst is over, prices have most likely peaked, Americans are not so sure. And to be sure, we're also not stupid. Food inflation is out of control. Look at the cost year to date. Wheat up 45%, hogs up 45%, corn up 30%, soybeans up 25%. Fertilizer costs skyrocketing, forcing farmers to raise prices. Not good for you and me, but not bad for the stocks in the group. CF Industries up 60% year to date, and Mosaic up 95% year to date. Energy costs exploded higher, adding more pressure to prices. And while that hurts the consumer, it has been good for the group. The XLE is up 45% year to date. Names like ExxonMobil up 45%, EOG up 42%, Chevron up 50%. Metals and mining, the XME is up 46%. Names in that group have done well as well. BTU up 200% this year. Cleveland Cliffs up 50%. Alcoa up 50%. Steel up 53%. The list goes on. So while the conversation is one of concern for future prices and difficult times for Americans, There are opportunities across the sectors. And what we're seeing, those opportunities are not in the sexy, high-tech, high-growth names of yesteryear. And earnings started yesterday, both JP Morgan and BlackRock kicking off the party. JP Morgan missed by a couple of pennies while BlackRock crushed it by 50 cents. Both came under a bit of pressure as the guidance was one of concern for the economy and the geopolitical issues that will surely continue to disrupt the economy in months ahead. Today we're going to hear from Wells Fargo, Goldman Sachs, Coinbase, PNC, Morgan Stanley, USB, Citibank, Ally. I suspect the story is going to be the same. It's not about the earnings as much as about the guidance. Year-to-date financials are down 4.5%, and with rates on the rise, I suspect that they will do better once we get more clarity on Fed policy. And with all the excitement yesterday, investor money went into the beaten-down sectors, as you would expect, right? They went on a bargain hunting shopping spree yet again. Consumer discretionary up 2.5%, communications up 1.5%, tech up 1.5%, semiconductors up 2%. Artificial intelligence by BOTZ, which is the ETF, was up 2.5%. Retail, XRT, up 2.2%. And disruptive tech, known as ARC, was up 3.3%. These are all sectors that are down double digits year to date. We also saw strength in energy, the XLE up 1.5% as oil rallies 9% off the lows seen last week. Basic materials up 1.5%, industrials up 1%, the value trade up 0.75%. Growth up 1.6%, and cybersecurity, CIBR, the ETF, gained 3.2%. The 10-year Treasury backed off a bit, and that helped to fuel the excitement in stocks. It ended the day yielding 2.69, down from 2.8 only 3 days ago, and that is what's giving the talking heads a chance to downplay the role of surging inflation and the expected response from the Fed. Many now trying to downplay what the next 4 meetings will bear. Fed fund futures are calling for 4 50 basis point hikes and then 2 25 hikes by year end, taking us to 3% by December. The naysayers are suggesting it's hysterical thinking. The Fed will not be that aggressive so that they can manage a soft landing, and that's laughable. A soft landing? Do you really think we're coming in for a soft landing after all of this? Even if inflation peaks at 11.6%, it's not going down anytime soon, so it's going to churn here at these elevated levels for months, leaving Jay Powell little to no choice but to remain vigilant. I mean, you know, every single member of the FOMC is now calling for swift, aggressive action. No more bond buying. We need to do higher rates. We need to reduce the balance sheet at a rate not expected 3 months ago. So it sounds to me like they are concerned and that they know something the rest of us may not know. Now, while this is how I see it, I'm not suggesting at all that you bail. Absolutely not. I'm just saying do not fall asleep. Let your money work for you. Okay, so what's next? Okay, so this morning, U.S. futures are mixed, right? Mixed ahead of more earnings reports from the banks, right? The talking heads trying really hard to convince us that the inflation has peaked so we can just sit back and relax, something I think is quite premature, but you obviously know that. Eco data today is all about advanced retail sales up 0.6% month over month, and ex-autos and gas of up 2% month over month. Initial jobless claims of 170, continuing claims of 1.5 million in line. Neither one of those data points is going to affect how markets are trading. European markets are all higher this morning. The ECB has done nothing. They did not raise rates, but they are expected to become more hawkish and prepare markets for policy tightening as the Eurozone inflation is running at record highs. At 6:30 this morning, markets were across the region were up about 0.5%. Bitcoin's trading at 41,000 this morning. Ethereum's trading at 3,100. Really kind of right where they've been trading now for a couple of weeks. The S&P closed at 44.46, up 50 points, breaking through short-term resistance at 44.30, and now expected to challenge 45.25. With futures muted this morning, I don't see it happening today as we move into the long weekend. Remember, markets are closed tomorrow for Good Friday, but it is a big option expiry day, so watch for elevated volumes. I don't think it's going to create a lot of excitement, but it will create lots of volume. So what do we have for dinner tonight? We're having this pan-seared, oven-roasted chicken thighs in an orange brandy sauce. Now, you can use chicken breast, but I like the thighs because the dark meat is always juicier. It's a simple dish to make. It sounds, and it's very elegant to present. Should take you about 40 minutes, 50 minutes start to finish, and shouldn't cost you more than about $60 to feed a family of 4. So for the sauce, you're going to need 4 tablespoons of butter, 1 shallot, 2 tablespoons of brandy, 1 cup of freshly squeezed orange juice, 3/4 cup of chicken broth, 1 navel orange cut into segments. right? Italian parsley and salt and pepper. For the chicken, you're going to need the skin on. You want skin on. Breasts and thighs. You need 2 cups of orange juice. Fresh is better. You need orange zest, olive oil, and salt and pepper, and some water. Now, you want to make the marinade right first. So you want to combine the orange juice, the zest, 4 cups of water, and maybe 2 tablespoons of salt, maybe 1.5 tablespoons of salt in a bowl. Stir it to let the salt dissolve. When it's ready, add the chicken and refrigerate it, right? Put it in the bag, swirl it all around, make sure it's all coated, put it in the refrigerator, let it marinate for a couple of hours. When it's ready, take it out of the chicken. You want to preheat your oven to 400 degrees, right? Let the chicken come to room temperature. Now, in a large oven-proof saute pan, you want to heat up some olive oil over medium-high heat. Get it nice and hot. Now add the chicken skin side down and cook it until the skin is golden brown, 4 or 5 minutes. Turn the chicken over, season it with salt and pepper, let it cook for another 3 or 4 minutes. Now put the whole thing right in the oven and roast it for 15 or 20 minutes. Right? When you take it out, do not throw away the juice from the chicken. You want to pour it into a measuring cup and let it cool so the fat comes to the top. Now, remove the chicken and put it on a plate and cover it with tin foil to keep it warm. In the same saute pan, you want to make the sauce. So use the juice from the chicken, skim a little bit of the fat off, use the juice from the chicken, pour it into the saute pan. You want to melt 2 tablespoons of butter over medium-high heat. You want to add the chopped shallot. You want to cook it until it's soft. Remove from the heat. Now add the brandy. Then return it to the stove. Scrape the bottom of the pan. The brandy will eventually evaporate. Right? There's only put a little bit in there, so it will evaporate. Now you want to add the orange juice. You want to boil it until it turns thick and syrupy, about 4 or 5 minutes. You want to add the chicken broth, and now the pan juices from that you saved from the chicken. Add those now and cook for about 3 minutes. Remove from the heat and add the orange slices, the parsley, and 2 tablespoons of butter, and stir until the butter melts, right? Taste it, season it with salt and pepper, adjust if you need to. Now, when you're serving this, you want to take the chicken that you've already cooked, you want to cut it into slices, right? And set it, kind of at an angle, and set it like in a fan-like presentation on the big serving platter, and then take the hot brandy sauce that you've just taken off the stove and pour it over, and take those orange slices and arrange them so they look nice on the plate. Serve this with a large mixed green salad with all your favorite stuff in there: tomatoes, cucumbers, scallions, maybe chichi beans, maybe even slivered almonds if you want, right? I would top that with, just like I do, a fresh olive oil and fresh lemon juice seasoned with salt and pepper and some oregano. Toss it and serve with the chicken. It's a simple meal to make. It looks great when you present it, and your company is sure to love it. In any event, get ready for the day today, because it's going to be, they're just going to go up and down about Lonnie Musk and what he's trying to do in free speech and what's right, what's wrong. I can't wait for the conversation. But the sun is coming up. It's going to be another day here in South Florida. Tomorrow is a day off. It's Good Friday, remember, so the markets are closed. So have a great weekend. Happy Easter, happy Passover for those who you are celebrating the Jewish holiday. In any event, take good care, and I'll see you on Monday.